In today's session, we're going to be covering the tasks needed to create year-end accounts on an accruals basis. If your charity creates accounts on receipts and payments basis, then we run a separate session for this, which we did last week. So you can find that session on our training page. In today's session, we're going to cover three things. Firstly, the key checks and tasks that are needed before you create your accounts. We'll then cover how to use the brilliant inbuilt end-of-year reporting template within ExpensePlus to create those accounts. And we'll also cover what to do once you've created your accounts in terms of independent examination and filing your accounts with the Charities Commission. As we talk through the steps needed, if you hear us talk about 2025, then this is the financial year that we are creating our accounts for. And if you hear us talk about the prior year, then that will be referring to 2024. And the final thing before we get started is just to say that no two churches or charities are the same. So please do contextualize and customize what we cover today for your organization. So our key checks and tasks. In this first section, we're going to cover those key checks and tasks that are needed before you create your accounts. To help with this, we've created that free checklist that you can download and customize for your charity. You can find this in the Zoom chat, or if you're watching on record, the link is in the video description. So in terms of creating your accounts, if you've been reconciling transactions during the financial year as you've been going along, as most charities will be, then as you'll see today, what you need to do at year's end isn't quite as big a deal as maybe it sounds at the moment. Whilst you have 10 months after your financial year ends to file accounts with the Charities Commission, it is worth accounting for the time that will be needed for things such as writing your trustee report, for your trustees to meet, for your independent examiner to review your accounts, and for the sign off and submission of your accounts as well. So it's worth not waiting until the 8th month or the 9th month before you have to submit those accounts. It's also worth noting that if you are a charitable company, then as well as filing accounts with the Charities Commission, accounts will also need to be filed with the Companies House, and you actually only have 9 months rather than 10 months to do this. So let's take a look at the checklist of 15 key things that we are going to be checking before year end. We are going to start with our opening balances. So let me share my screen so that we can see what we are looking at on ExpensePlus as we talk through the checklist. So as I'm sure you will know, your closing balances in terms of your charity's financial position at year's end carry forward to become your opening balances for the next financial year. It's therefore important to check in your balance sheet that the prior year within ExpensePlus matches with your submitted accounts for that year. So we can find our balance sheet in our finance reports, and we can see our prior year totals in here. If there are any issues, it's important to obviously fix these. Typically, what will have happened is that someone might have made some adjustments outside of ExpensePlus when creating your accounts and not reflected these in ExpensePlus. So 3 quick ways to avoid this from happening. The first is to complete this great checklist that we're going through before you create your year-end accounts each year, as this will minimize the need for any adjustments during the review stage of creating your accounts. The second is that before signing off your accounts, it's really important to compare your balance sheet from your accounts with what is in ExpensePlus and to request any detailed breakdowns of any differences that have been made and adding these into ExpensePlus so that basically ExpensePlus matches the accounts you're signing off at the point that you sign them off. And thirdly, you are able to lock your financial year within ExpensePlus to prevent any accidental changes after the accounts have been signed off. And we'll cover how to do this later in the session. Now, if your prior year wasn't ExpensePlus, this is your first financial year using ExpensePlus, then you'll find your opening balances within the opening fund balances screen. You can find that in your settings, under funds, and in your opening balances here. And this is where you'll just need to make sure that these match your financial accounts from the previous year. Check number 2 on our list is bank transactions. So ExpensePlus is bank statement driven, which means that if you have uploaded your bank transactions correctly, either by manual upload or via the automated feed, your bank balance at the end of 2025 should match the balance on your actual bank statements. And that should be the case for each of your bank accounts within the bank reconciliation screen. You can see your closing balance here in this column of the table. This is one of the key checks your independent examiner should do, and therefore it's one of the key checks you should do at the start of this checklist. If you happen to have any payment processor accounts set up within Expense Plus, then you also need to ensure that the end of year balances on Expense Plus are correct for those as well. And next, you're going to need to check that all the uploaded transactions for the year that you are creating accounts for have been reconciled. So let's have a look in our main account here. And we can see that actually there is a transaction that relates to our financial year, it's within 2025, that needs reconciling. So I'm just going to reconcile that before I create my end of year accounts. Just the top tip, it's also typically worth reconciling the month after the end of your financial year before you create your accounts, as you might come across some payouts that relate to income that are from the prior year or transactions that need to be accrued for. So if you are keen, if your financial year ends on the 31st of December, the 1st of January might not be the day to start doing your financial year end accounts. Now, check number 3 on our checklist is our petty cash account. So if you use petty cash, then petty cash income and expenditure hopefully has been recorded during the financial year within the petty cash screen. And if not, now is the time to add any of those missing petty cash transactions. So we're going to find our petty cash module. And you just want to check that those transactions have been recorded. And as a final check, you then want to ensure that your petty cash balance within Expense Plus matches the amount of physical petty cash that you held at year end. So you're going to have to go to the drawer or the box that you keep that petty cash in and make sure that it adds up to the same amount that is on Expense Plus. Now, check number 4 is our purchase receipts. So receipts within Expense Plus, as I'm sure you'll know, are digital, and these should have been being uploaded and checked as part of your regular finance process flow. And at year end, it's really important to ensure that all these receipts relating to the financial year, so relating to 2025, have been checked and none are still showing on the receipt screen. So let's have a look and see if that is the case for this organization. It's not. We've got a receipt here from December that still needs checking. So I would need to go into this, check the receipt, send it through to approvals, or if it didn't have a receipt, I need to mark this as lost and then authorize that lost receipt before we can create our accounts. Now, this is a good opportunity to also check which receipts haven't been provided for the whole year and to upload any additional receipts that we might have. And for this purpose, we have a brilliant report that you can use within this module, which you can find by clicking on the View Purchases Without Receipt screen. And this will tell you why the receipt status, what the receipt status is, and maybe why it's missing. So some transactions might not need a receipt, some just haven't been uploaded yet. But this will give you the chance to look and find which ones you might be able to upload before creating your year-end accounts. Just to note, if you started using Expense Plus mid-financial year, and again, this is your first financial year on Expense Plus, and you happen to have all of your receipts from prior to using Expense Plus on paper, then do contact our support team who can mark those receipts as being held outside of Expense Plus for you. The check number 5 is our income documentation. So as well as uploading documents for purchases like receipts or invoices, you also need to provide documentation for any grants, legacies, and maybe large donations that you receive. Your independent examiner is likely to want to view these, so we'd recommend that you upload them to Expense Plus, which you can do by clicking on the relevant transaction. Now, a great way to identify those grants or legacies and any large donations is to use the transactions by amount reports. We can find that in our finance reports. And our transactions by amount report here will then list our largest transactions for income and expenditure. We can see that there are a couple of grants in here that we might want to add documentation to. Currently, there isn't any. We can click into it. We can click the tick box that I'd like to provide a file attachment, and then you can upload a file that is relevant for that grant. So if I had a file relating to this grant, then I would add that in there. Check number 6. We're going quickly because we know that there's a lot to cover. So apologies for the speed. But check number 6, if it is about recording your transactions. So if, like most organizations, you are checking your financial reports each month as you go, then this check shouldn't take too long. You're basically looking to check that transactions have been recorded correctly. Most specifically, that transactions have been recorded to the correct fund. That's really important. So for this check, you could use the view statement screen. So if we go back to the bank reconciliation screen, we can go into our statement and we can select, if our financial year started in January 2025, we can go through line by line, making sure that everything has been allocated correctly. That's obviously going to be quite time consuming, but there is an alternate way. You can choose to use the income and expenditure reports within Expense Plus to spot anything that isn't quite right. So if we go to our finance reports and we go to our summary by fund, this will help us look for, there's four key things that we're kind of looking for really. The first is any transactions that are coded to an other or to be recoded category. So that might be for transactions that we weren't quite sure where they should sit at the time of purchasing and they haven't been reallocated yet. Now, usually we would recommend they are kind of in this Z other category, and we can see that we've got one transaction in here that should actually be somewhere else. So Sam has bought some milk. No, sorry, Barry Lawrence has bought some milk, and we need to allocate that to the correct category. It's sitting in the wrong place right now. So that's what you want to do with any transaction sitting in your Z other category there. The second thing you want to look for is to check that any restricted income hasn't been recorded into an unrestricted or designated fund. So if I go to my income and expenditure by fund and look in our general fund, 1 second. And look in our general fund, we might find, in fact, sorry, I've come to the wrong report. We're going back to that report we were on, the summary by fund, and we're looking in here for anything that might be restricted income, because this is our general fund, which is unrestricted. And in here we can see there's a category called donations for purchase of flowers. So this is clearly restricted income because it has a particular purpose. This shouldn't be recorded in our general fund, and we need to recode that into a restricted fund. Now, the third thing we're looking for is any expenditure out of restricted funds. We want to make sure that expenditure out of our restricted funds are in line with what the money was given for. So if we take a look at one of our restricted funds, we'll go into our building project and just check that all of the expenditure is related to what that money was given for. So in here, we can see that we've got several categories of income and expenditure. What have we got in here? We've also got a category that says weekend away. Now that quite clearly doesn't fit within our building project fund. That's been coded in the wrong place. That category should be somewhere else. We want to make sure that all of that is allocated correctly. And the fourth thing we want to look for is any expenditure that can be covered by restricted funds hasn't been recorded to an unrestricted fund. So for this, we would go to look at checking in our funds and making sure that everything looks as it should do. So this is one of those checks where if you have a fund, maybe a food bank fund, and there's very low expenditure in there, you might want to question why that is. We know the food bank's been running. We know we've been spending money to buy things for the food bank, but we can't see that expenditure on our reports. Have we coded that to the wrong fund? Have we put that in our general fund by accident? Because there's a general rule, we want to use up restricted funds first before we use our unrestricted funds. So check number 7 is claiming gift aid. So once all transactions relating to the financial year have been reconciled, it's typically recommended that you create and submit gift aid claims, as this will enable you to know how much gift aid income will be accrued for. If you have auto accruals enabled, then you have the option to auto accrue gift aid claims on creation. So let's have a look at our gift aid module. And in here, we can see we've got a couple of gift aid claims that we still need to submit before year end. If we submit these, you can see that if you have auto accruals on, you'll have this option to automatically accrue this gift aid. And you can submit that to HMRC. If you don't have auto accruals enabled, you can accrue for this income within the adjustment screen by adding an accounts receivable adjustment for any amounts owed from HMRC at year end. And on that note, we are going to move on to number 8, which is accruals and deferrals. So we're going to add any manual creditor and debtor adjustments to ExpensePlus. With auto accruals enabled, you typically won't need to add very many. But first, where creditors But the first check for us to do is really to look at where any creditors and debtor amounts have been carried over from a previous financial year and are still showing on our balance sheet at the end of 2025. We're going to want to check those that none of those should have been reversed within the financial year. So if we go to our balance sheet, this is where we can see all of our credits and debits, creditors and debtors, sorry. And we just want to check that all of these are related to the financial year that we are in, and maybe question here, why have we got an expense claim for Hannah Cronin that's from 2024? Has that been paid? Should that have been reversed if that was a manual adjustment? So next, we're going to check that we're happy with all of the auto accrued transactions. So for example, if you spot something dated for more than 1 or 2 months before the year end that is still showing as outstanding, you might just want to wish to interrogate this and check that those are as they should be. Now, in terms of manual adjustments to consider, your accounts receivable, that's income that relates to the financial year but is still outstanding at year end. Because invoices and gift aid claims are auto accrued for, many charities, there will be no manual accounts receivable adjustments necessary. And in a similar way for accounts payable, because expenditure is also auto accrued in ExpensePlus, you typically won't need to add many manual account payable adjustments. The only typical exception might be your independent examiner's fee, because obviously that relates to the financial year you are creating accounts for, but might not have been paid yet. So you can have a look in your adjustments module, and we'll look at accounts payable, money that we owe, and we can see our independent examiner's fee is in here, ready to be reversed when that is paid. Moving on to talk about deferrals, you might have some prepayments, such as insurance or licenses paid up front, where a portion of the expenditure needs to be deferred into the next financial year. Or you might have deferred income, so that's income received in advance, such as wedding income received in this financial year, where the income needs to be recognised in the next financial year. Many charities won't have deferred income or prepayments, but we just want to check that all of those are as they should be in our accounts. So here we go. We've got 6 months of insurance paid in 2024. That is relevant to 2025 in here. So we just want to check whether that needs to be reversed before year end and whether all the details are correct. As we say, auto accruals will minimize the number of manual adjustments needed, and the principle of materiality within accounting means that you don't need to spend lots of time adding manual deferrals for really small amounts. If you're unsure about any particular expenditure or income, please speak to your independent examiner. They're the best person to speak to about that. Check number 9 on the checklist then is investment gains and losses. So this, if applicable to your organization, you just want to check that your investment gains and losses have been recorded correctly. So in the investments module, you can register any gains or losses in here as and when. You additionally want to check that your closing balances match your investment statements. In a very similar way, check number 10 is our loan. So if that is applicable, you may have loans recorded in ExpensePlus. You want to check and update that any loan repayments are registered within ExpensePlus. So capital repayment amounts and balance amounts on ExpensePlus need to match your loan or mortgage statement. Now you can edit any repayments by clicking on them. For example, I can click on this one here, and you might, for example, want to update the split between capital and interest, and that is available to do within this screen. Check number 11 then is our fixed assets. So first, we want to ensure that purchases have been capitalized according to your policy, which you should find written within your prior year accounts if you're unsure of what that policy is. Typically, many charities have a capitalisation policy which states that only assets over £1,000 in value need to be capitalised, which is recommended as you typically don't want to be capitalising lots of smaller items. The best way in ExpensePlus to search for purchases that might need capitalising is within the search purchase screen. So if we go to our purchases module and we search all purchases, there is the ability to search by purchase amount. So we can say that we want to search for anything amount more than £1,000 and search in here. And here we're looking for any purchases that need to be capitalized. Now, this report will give you all purchases more than £1,000. So that includes, salaries and things that don't need to be capitalized. So you'll just need to review this list to work out which of these are fixed asset purchases. And if it's helpful, you can download this report as a CSV file down at the bottom here, and then you can kind of filter as you like using that file remotely. To capitalize a purchase that does need capitalizing, simply update the category from an expenditure category to a fixed asset category, and this will automatically capitalize the item and show on your balance sheet. Next, we need to depreciate our fixed assets. So if we go to our fixed asset screen, in here, if a depreciation plan has been set, you can simply click the plus button to the right, and ExpensePlus will automatically calculate the depreciation. And you can work your way down the list, doing this for all of your fixed assets. If you have any land or buildings, you typically need to get these professionally revalued every 3 to 5 years. And if you need to add a revaluation within ExpensePlus, again, you can do this by clicking on the plus icon to the right-hand side. So we'll see this building here. We can click the plus. We can either add depreciation or add a revaluation, and we can add those details in there. Check number 12 then is our category transfers. So if any category transfers have been added, you want to check that these have been recorded correctly. And for this, you'll need to go to the category transfers screen, which is found within the adjustments module. We'll have a look at our category transfers. We just want to check that if you have any recorded, that the details are correct, basically. Category transfers within ExpensePlus are brilliant because ExpensePlus prevents you from creating transfers that will result in you overinflating your income and expenditure in your year-end accounts. And if you want to find out more about category transfers, then do check out our brilliant online help guide for more information. In a very similar way, then, our fund transfers are check number 13. From the same screen, the adjustment screen, we can look at any fund transfers. If they've been added, check that these have been recorded correctly. For example, if your trustees decide they wish to increase a reserves fund by £5,000, you can add this as a fund transfer. Just a note, remember, if you're doing any fund transfers, you typically should not be transferring money out of a restricted fund. We don't want to do that. I am going to hand over to Sam now, as he is going to take us through the last few on the checklist so that you get somebody else's voice, and he's going to take us through creating our accounts and what to do once we have created them too. So Sam, over to you.
Stuff. Thank you so much, Jack. That was really, really helpful taking us through those checks. I'm just going to finish off the last couple of checks then on the checklist. And the next one we're going to look at is gifts in kind. So if you've received any tangible gifts in kind, such as free rental or an item that's been donated, then you need to check that these have been recorded in your accounts. So if, for example, you are being given free office rent for, then actually that it's no good going, well, no money came in or went out of our bank account, we don't need to include that. Chances are you're going to need to include that. And if you're not sure, you should speak to your independent examiner about whether that needs to be recognised or not. So in the case of £6,000 worth of office rental, so your independent examiner, for example, might advise you, that you do need to include it. And actually the charge that the landlord would have charged would have been £500 a month. Therefore, you need to recognise that kind of gift of £6,000 that they've given, along with the expenditure you would have spent the money on. That £6,000 of expenditure needs adding to your accounts. How do you do that then inside ExpensePlus? Well, you could do this inside a separate bank account if you wanted to. I'm just going to do it inside the main bank account of this organization. I'm going to come in here. I'm going to upload a couple of transactions. So when you click upload, you can use this got a paper statement and upload manually option. And all we're going to do in here is on the 1st of December, we are going to put gift in kind in here. Office rent, or we might even want to put free office rents. We're going to duplicate that line in here, and we are going to recognise £6,000 in. So it's like the landlord has given us £6,000 for free, which they kind of have. They didn't transfer the £6,000 into our bank account, but they kind of did give us £6,000 because they didn't charge us office rental, and we've got 6,000 going out, which is kind of like what would have happened, right, if we'd actually paid for the office costs. And so what we've done is we've added a pair of bank transactions here. What's it going to do to our overall bank statement? Absolutely nothing, because 6,000 in, 6,000 out does not equal any change with our current bank balance. But what it's going to allow us to do is it's going to allow us to record the income and the expenditure. And so we're going to click yes to that. We're going to go to match transactions, and essentially inside here we can then reconcile transactions exactly as you would expect to be able to do. So we can go other income, we might go donation income, it doesn't matter too much. We can put free office rent in here. We can select our funds, select our category, large one-off gifts, and we can just record that in here. So essentially that's now going to show in our income as if because the landlord gave £6,000 essentially, and then we could also record the expenditure for this, or we can go invoice payment. I'm just going to pick the first supplier on the list, but obviously you can go and add this in here, rental, and we're going to again select a fund, select a category. In here, if we've got a building category, yeah, we have. It's probably not maintenance, but we're going to pop it there anyway, just for time. So you can see how that works. That's what you do for gifts in kind. If you're not sure what you need to do that for, then you should speak to your independent examiner to advise you about what needs to be done, what the amounts should be, and how to go about that. But hopefully that is helpful. The final check on the checklist then is checking that you're happy with your financial year end balances, because once you sign off your accounts, unfortunately, it's not so easy just to go, oh, I forgot that thing, let's just go change it. You shouldn't be doing that. You can do things called prior year adjustments. You definitely want to avoid those. So actually, why not do the sensible thing of just making sure you're happy with your key financial reports before they end up in your accounts? And so how would you go about that? Well, the key financial reports are going to be found inside financial reports. One of the key ones I'd be checking, probably the most key one for me, would be checking the balance sheet. There's different versions of the balance sheet inside ExpensePlus. You can use the by fund type if you like. This is the classic kind of year-end version of the balance sheet. That is probably a great one to be checking. And what you're doing is you're saying, look, am I actually happy with this? Does this look right? Like, does it look right that we have, like we have £78,000 worth of kind of cash? Yeah, no, that does. Does it look right that we owe we owed, sorry, £245? Yeah, it does, because I know that we've got some invoice income that didn't come in. Prepayments of 500. Is that right? Yeah, no, there was that insurance, wasn't there? So you're working down this balance sheet, saying like, is this actually right? And this is the chance to check it. Not once you signed off your accounts and you think, oh no, I probably should have a good look. This is the time to have a good look, that you're very happy, and also to be checking that the fund balances that represent these look right as well. If not, as Jack's already mentioned, go into the transactions, interrogate, find out what is going on, and until you're at the point where you're very, very happy. The other report you can use for checking that you're happy is the fund movement summary report. Obviously, note here, because you're working on an accruals basis, your fund balances aren't just cash. So that's where you need the balance sheet as well. And you can, in that balance sheet report we just looked at, you can filter by a particular fund if you want to. So do just bear in mind, these are not cash balances, they're fund balances, which include kind of assets and liabilities. And so do just bear that in mind as you're checking this. If I'm checking this, I'm checking for a few things. Firstly, I'm checking, so I'm doing some of the checks that Jack's already done actually. But firstly, I'm checking that where there's little or no expenditure in a fund, I'm checking that actually we've coded all the expenditure we can to that fund. So as I look here, I'm not seeing much expenditure in the food bank fund, and so I'm like, is that right? Did our food bank not really spend any money last year, or has that money, for example, been allocated to the general fund? So I'm checking that. I'm also checking where restricted fund balances are running low. Now, in this case, neither of my restricted fund balances are running low, but if they were, I would be asking the question: do we need to seek additional income? Or can we, once the money runs out, pay for that thing, that food bank or whatever that might be, out of our general funds? Because you need to be planning for this. And your independent examiner is potentially going to ask you questions around this. And so do just bear in mind that, as well as kind of your fund balances as they are now, like actually what's your plan for the future in terms of covering those costs? Or maybe the costs are going to stop, in which case, maybe you're okay. Typically, your fund balances should not be negative. So if you see any negative fund balances, you need to ask the question, are we really sure about this? Now, it is possible to have negative fund balances, but typically it's not normal to have them. So again, if you're not sure, then speak to your independent examiner. If it's an unrestricted fund or a designated fund that has a negative balance, then what you need to be doing is either recoding some of the expenditure to a fund that actually has money in it, or you need to be doing a fund-to-fund transfer, a bit like Jack showed you, but to kind of make sure that balance doesn't end in negative. Finally, if you have a restricted fund, so maybe we've got our food bank fund here with this amount of money, our food bank sadly had to stop. You can't just transfer money out of that restricted fund. You need to speak to your independent examiner about what you need to do with that. Do you need to return the money? Do you need to speak to Charities Commission? And so, yeah, this is where, when you're trying to check where expenditure has been coded to, you always want to try and use your restricted funds first to avoid the situation that in 3 years' time, that restricted fund has money left in it, and actually the thing that you were using that money for no longer is happening. And so you do want to be trying to eat up essentially your restricted fund balances first, where of course that's within the allowable restrictions of what the money has been given. Okay, so we're checking our two key financial reports. Obviously, you want to check the other ones as well, but I'm just briefly mentioning that again because that is what I'd be doing, particularly the balance sheets, as the balances on the balance sheet are going to carry over into your next financial year, and so they are really important to be correct. So we're now going to move on to the next section, which is all about creating accounts and using the brilliant year-end checklists in ExpensePlus. And what we've covered so far is really important because if you don't do those checks and stuff is wrong, then of course this template is only going to be filled with wrong information. So super important. That's why we've spent the vast majority of this session going through those checks, because we want to help you get those right. If you get those right, what you're about to see in terms of creating year-end accounts using the template is really straightforward. So yeah, that's why we spent a lot of time on that. So inside our year-end template, we will go and select the year that we're creating accounts for. Obviously, if we're creating 2025 accounts, we want 2025 to have finished. But just for today's session, we are pretending that we're creating accounts for that particular financial year. Now, the first tab is the contents page. And so actually on this tab, it very helpfully shows us kind of which sections we have and haven't completed. But we're going to work our way through each of these. So the first section we're going to go to is legal and admin. Now, this is really administrative information about your charity details. And if you've done this in the prior year, this will just immediately be populated for you, and you can just check that everything is correct. Your charity trustees, again, do check that nothing's changed. If a trustee's left or you've added a couple of new charity trustees, do make sure they're added on here, because of course this needs to accurately reflect the information held by Charities Commission for you. You need to list out key management personnel, where you bank, etc., solicitor if you have one in here. So this is basic information about your charity, of which is going to be the same year to year, maybe with the exception of trustees joining or leaving. The trustees report is your written trustees report, and this is where you get to kind of add the text that you would like to from kind of what the trustees have written. However, do note that things like the objectives of the charity are unlikely to have changed year to year, and so lots of these sections you can keep with. If you're just using ExpensePlus for the first time to create year-end accounts, again, you're probably going to find this information in your last set of accounts. So before you start reinventing the wheel, maybe go to those accounts and actually see what was written there. Your summary of your charity's main activities and achievements, this is likely to update, but again, lots of the things that you were doing in the prior year are probably the same for the year-end accounts you're trying to create. So again, whilst you want it to accurately reflect what your charity has done and what it has achieved in that year, you may find that you don't need to actually spend as much time as you were thinking in terms of updating. You could start with where you got to last year. And some of these other sections like structure, governance and management, unlikely to have changed, but do review that. Again, you can copy it from prior year if nothing's changed. Financial review, this is going to change based on what the kind of figures are for the year in question. So you're going to want to update that. You need to state if any funds are in deficit, negative balance, which hopefully they won't be. If you've got an investments policy, you need to include that reserves policy as well. Again, this is information that should just be from the prior year accounts, copying, pasting over unless anything has changed, in which case, of course, do update it. The next tab is the Independent Examiner's Report tab. In this, it's got some default template text. You don't need to be updating this unless your independent examiner asks you to. All you need to be doing is adding your independent examiner's details in here, and this will just be part of the accounts pack that will get created, and of course will be signed by your independent examiner. SOFA report, then, also known as the Statement of Financial Activities, lovingly called SOFA for abbreviation. Well, this is where the year-end template is brilliant, because no longer do you try and have to create this outside ExpensePlus or pay someone else to do it and copy and paste the information over. It's actually just literally drawing the information that is inside ExpensePlus, inside those key financial reports, and putting it straight in here for you. So you're not going to make any mistakes. And if you've done those 15 key checks that we've talked through, then the information that's going to be pulling through will be correct. So this is just pulling pulling through the information needed. There is nothing you need to do here if you've already done the checks inside Expense Plus. If not, then you just need to work your way through and just make sure that this is showing correctly. If your question is why is one of these kind of sections, why should your income or expenditure essentially break down too high or too low in the different way that is segregated, this will be to do with how you've categorized your categories. So within category settings, if you go into category settings, you'll note that each category has a SOFA type in here. And so if you're seeing numbers that you're thinking that's not quite right, as in the overall income's right, but it's not broken down correctly, chances are your category types have not been allocated correctly. So if you come in here and find all of your income categories are allocated as donations, well, that's why all of your income is showing in that section called donations and legacies in here. So yeah, you just want to be checking this and making sure that you're happy. Your balance sheet information, again, it's pulling through the right version of the balance sheet, which is the year-end version of the balance sheet, the by fund type version in here. And this is pulling through. You might be wondering, why is it not showing a column for designated? Well, hopefully you're aware that designated funds are a type of unrestricted fund. They're not a halfway house between unrestricted and restricted. They are actually unrestricted. So this unrestricted combines both your unrestricted and designated, as it should do. And again, this is your balance sheet, which if you've checked already is just going to be a correct cash flow, it's up to you whether you include this. Typically, it's included where your charitable income is more than £500,000. If it's not, then typically you wouldn't include a cash flow statement. It's up to you to decide whether to toggle this on or off. But if you keep it on, then it's just pulling through all the information you need in here. There's nothing further you need to do. Accounting policies, there is default text in many of these fields. So if you're coming to this for the first time, you won't need to start from blank. Equally, you can look in your last set of accounts because these disclosures are unlikely to have changed year to year. And so you can just go through and see what you wrote last time, copy that in, check that it's still accurate. And so you can go through these sections. These are the disclosures kind of needed that comply with SORP. And so if you're thinking, why am I having to list these things out? It's because they are required for your church or charity. And so do just work through those. There's also help guide guidance. If you get stuck, just click the blue help icon here and you can come to our help guide. Click here. You can also email our support team. It's worth noting if your question is a fund accounting related one, like, hey, I'm not sure if I need to recognize this gift in kind, or I'm not sure if that you need to be taking that to your independent examiner rather than to us. But if it's a software question, then please do feel free to message us. Analysis of income and expenditure. Again, this is just pulling through from your reports. This is actually the same SOFA report that we saw in the SOFA tab, except expanded out more. If you don't like the way that it's expanded, as in you would rather that instead of having these three kind of breakdowns of your donation legacies, you'd like to do that differently, then again, if you come to settings, you come to categories, then within here you can go to edit category types, and that defines what this breakdown looks like on your year-end accounts. So feel free to do that if you would like to do that, and you might want to do that to match how you've reported your kind of breakdown in the past. It's worth noting if you're in your first financial year, then in some of these reports you will need to kind of add your prior year totals. You'll be prompted to do that where that's needed. Analysis of net assets. Again, this is just pulling through for you. There's nothing extra that you need to do for this. In some ways, this is just scrunching down your balance sheet and also grouping it by fund type. For you, there's nothing additional you need to do for that. And then other notes. This is again some disclosures in here that you need to add. For example, your independent examiner's fees. If that's increased, you need to obviously reflect that inside here. And so you're just going through and filling out these sections. Most of them are really self-explanatory in terms of what you need to do here. Again, information about tangible fixed assets, information about investments are just pulled through from the relevant reports, which is why this is so brilliant, because you don't actually have to figure out and trying to create all this in a spreadsheet and make sure all your formulas are correct. It's just pulling through the data needed. Inside this section, you need to break down your debtors and your and inside here, so we can break down our debtors here. You can click through and have a look at what actually that amount is made up of. And then inside here, you can break it down. So in this case, we're going to actually put all 245 in here. It rates the invoice income. We can just pop it in there. It wants us to split it. If you want to create the split slightly differently, there's this add edit button. So you can create them however you want. Here's our insurance, which we're just going to put in there as a prepayment. Again, we can change that if we want. Accounts payable, we've got quite a big amount here. We can work out how we want to break this down, what relates to tax and social security. Maybe that's £1,000 of this, so we can come in here and add it. If you're not sure, just click through on this link and it will show you all of the transactions that make up the totals, and then you basically have to create like a summarized version in here. Same for creditors. Sorry, I've just covered creditors. Same for that. In terms of loans, it's going to show. This is just going to pull through based on what we've done with our loans. Obviously, in the financial year we just looked at, we paid off £800 worth of that capital, which is why we can see that that's now this amount, whereas it was this amount in the prior year. We've got analysis of charitable funds, and again, this data is just pulling through for us. There's nothing kind of extra in here. Essentially, this is a sort of slightly different view of the fund movement summary report, but it's the one required for year end. And so you've got that in here as well. Any fund transfers are automatically listed. And then you've got your fund descriptions. If you've not added descriptions for your funds, you'll just get prompted like this. You can just click through and you could just make sure inside here that you add a description for your funds. And that's what's going to get pulled through and shown in your end of year accounts. Let me just look if we nearly got to the bottom of this. I think we have. Yeah, and then you've got some other disclosures around things like related party transactions, etc., and a box at the bottom for any extra disclosure that you want to add. Once you're done with this, then you can download it. So if you go back to the contents page here, once you're happy, you can either download as PDF or as a Word document. If you go for Word, then you'll be able to obviously format it. You can add in pictures if you want to. You can do anything you like. So often that's a common thing that people are very happy with a template, but they kind of want it to look a bit different, and that's absolutely fine. Feel free to do that. Otherwise, you can download the PDF version, in which case it's just automatically in PDF format. I'm just going to check my notes just to make sure I haven't missed anything. Yep, there's one thing I wanted to mention, that once you have created your year-end accounts, i.e. you're happy with this, maybe it's the first draft, we would highly recommend that you go to system settings and you lock your financial year. So if you go into system settings here, we go into organization settings, we can see that actually all of these financial years are unlocked. What you want to be doing at the point of creating accounts is locking that financial year. You can unlock it again, but what it means is, as you've created version 1 and you've sent it maybe to the other trustees to review, etc., it means that it's no one can kind of accidentally go and change something that you've worked on, so that you come back a week later to add in your 3 amends and actually in the meantime something's changed. So do lock your financial accounts. You can unlock again, but it just stops any problems. And once the accounts are signed off, as Jack's already mentioned at the very start of this session, you want to make sure that your opening balances match. Well, if your accounts have been locked, then that will ensure that's the case. If you leave them unlocked, someone might just come along with an expense claim back from last year and think, oh, I'm going to enter that today, and just enter the date. And ExpensePlus will then, of course, auto accrue it to a year that essentially you've already finished. And so do lock your accounts. Highly recommended, as it will stop you having any problems. I'm just going to change screen share at this point. Just give me 1 second to do this, and then we're going to go through. So we're going to talk now what happens in this final section once your accounts have been created, and then we'll stop for Q&A at the end of this. So if you do have any questions, please pop them in the chat to Jack, and then we'll cover them at the end. Don't worry if you sent them to me, I will also cover those as well. So the next thing we're going to cover is independent examination. So typically, if your income in the financial year is under £1 million, then you should be able to typically have your accounts independently examined rather than audited. And that threshold is actually going to increase to 1.5 million, which you possibly have heard about. So that threshold is increasing. And it's worth noting this because an independent examination is not the same as an audit. It's a much smaller thing. It's a much more kind of like less rigorous thing. It's like not in detail as much. It's also much cheaper. It's worth noting if you are in Scotland or you're in Northern Ireland, those thresholds are different. So do check with the kind of relevant Charities Commission for the part of the world that you are in. Now, in terms of an independent examination, the independent examiner, obviously, your independent examiner needs to be independent. They need to have the necessary skills and experience to carry out an independent examination. So they can't be a trustee, an employee, a beneficiary, a major donor, and they can't be related to anyone that is any of those things either. In terms of skills and experience, the Charity Commission recommends that examiners for charities with income of over 100k, £100,000 a year, have a qualification in charity finance or are qualified an accountant. And for charities with an income of over £250,000, the independent examiner must be qualified. It's also worth noting that just because someone is an accountant, and they may be a brilliant accountant, they may, have worked in business accounting for many, many years, this does not necessarily mean that they have the right skills and experience for charity accounting, because charity accounting is quite different to business accounting. And this can be very problematic with independent examiners missing really basic fund accounting mistakes. If you do everything we've talked you through today, then you may find that you know more and you are doing more than your independent examiner will spot. And that's an issue because your independent examiner essentially should be there to provide your trustees with a kind of like outside view to make sure you're doing everything correctly. So we would highly recommend that you do make sure that your independent examiner actually does have the necessary skills and experience to help you. Another issue that we see is that lots of charities pay far too much for their independent examination. So if you think that might be the case for your charity, it's worth getting 2 or 3 different companies to quote to do an independent examination. And remember, it's your choice as to which independent examiners you decide to use. Now, if you're not sure where to start with this, there's a couple of independent examiners that we are aware of, Wyatt and Co. and Stewardship, which are both brilliant. And so we recommend them not because we get any benefit from doing so, but because they both know what they're doing. And for my money, I would rather kind of pay for an independent examiner that does know what they're doing rather than kind of, getting someone that might, do it £200 cheaper for you, because actually you want independent examiners that are able to provide the right advice and actually are going to go through in detail and look at your accounts and come back to you with questions and are going to ask the questions that need to be asked. We see far too many kind of year-end accounts which have been signed off that have been independently examined that are just wrong, like as in with income that is restricted, not recorded properly as restricted income, and other things, and year-end accounts that aren't SORP compliant, etc. And so do just bear that in mind. If you're not sure, then do just get a few quotes for independent examination. We'd highly recommend that. In terms of giving your independent examiner access to ExpensePlus, you can do this inside the user settings screen inside ExpensePlus. So you just go to user settings, you can just click add user, you can enter the person's name and email address and give them the role of independent examiner or auditor. This will automatically give them read-only access inside ExpensePlus. It will save you from having to send them reams of paperwork, reports, documents, etc., because they can access everything they need inside ExpensePlus. It is worth noting, however, they will still, or your independent examiner should still, ask you for PDF copies of your bank statements, and they should be using this to check that obviously the transactions inside ExpensePlus that you've so carefully reconciled are actually the ones that appear on your bank statement. So don't be surprised that, in fact, do expect your independent examiner to ask you for PDF copies of your bank statements. So in advance, you could start downloading the different months of those ready to send them at year end. It's also worth mentioning that whilst independent examination is typically very quick, remember it's not a full audit. If your independent examiner is independent examining lots of charities at the same time, then you don't want to be leaving it to the last minute to get your accounts independently examined. Also note that your independent examiner may come back with a list of questions having looked at your accounts. For example, they may spot that the trustees listed in your accounts don't quite match up with what's on Charities Commission, or they may ask you about a particular related party transaction that they think they've spotted which you haven't declared. Or maybe they might come back and ask you about what internal financial controls you have in place. This is perfectly normal, and I would suggest is a very good sign that your independent examiner is doing their job properly. So do expect questions to come back. If you get no questions back, that's probably a sign that you may want to ask that question. Does my independent examiner definitely understand fund accounting, and are they doing what we're paying them to do? In terms of signing off your accounts then, which is the next step, once your accounts have been independently examined, I'd suggest at that stage you need to be circulating them to your other trustees. And once they've been agreed by your trustees, typically that happens in a trustees meeting, written into the minutes of that trustees meeting, one of the trustees, possibly yourself, if you're a trustee, will need to sign off those accounts on behalf of your other trustees. As soon as it's done and your independent examiner has also signed the page that they need to inside your accounts, then they're ready to submit to Charities Commission. Don't forget, if you're a charitable company, you'll also need to submit to Companies House as well. Then in terms of submission, in terms of submitting your accounts, the Charities Commission portal makes it very easy to submit your accounts. If you haven't done it already, then you're in for a treat. It's pretty easy to upload your accounts inside that portal. If you don't have permission to sign in, if you don't have a sign in for the Charities Commission portal, that should be something you're thinking about now to fix in terms of who has access in your charity that can either add you or can they submit the accounts for you. The only note with this that whilst you submit your accounts and whilst uploading your accounts to Charities Commission is really easy, Charities Commission then ask you lots of lovely questions about your charity, from your largest giver to well, there's loads of questions. I'll let you find out. But essentially, if for that, we have created a brilliant help guide article inside Expense Plus, which we'll make sure we include in the follow up to this session, which covers where you can find the information that charities commission us within Expense Plus really easily. The submitting accounts really straightforward via the portal, but do bear in mind that charities commission are going to ask you quite a number of questions as you go about doing that. So we're nearly there at the end of today's session. So just to recap then, so we've covered the key checks and tasks needed when creating year-end accounts, or rather before creating year-end accounts. We've talked about how you create year-end accounts inside Expense Plus, inside the template. And we've also talked about what you need to do once you've created accounts. And we hope that you found this session